ServiceNow closing out the day as one of the top stocks in the S&P 500 after Bank of America reinstated the stock as a buy with a $130 price target. The firm citing the company's leadership in agentic AI opportunity as reasons to buy ServiceNow. But Salesforce is not receiving the same enthusiasm from Bank of America. The stock reinstated with an underperform rating as it faces several headwinds from AI. Despite the negative call, the stock was one of the Dow winners today. Joining us now is the analyst behind the calls, Tal Liani from Bank of America. Tal, great to have you with us.
Thank you.
The argument that ServiceNow is deeply embedded, it's mission critical, it's difficult to replace. You probably could have made that argument at the beginning of the software sell-off. Is it just valuation now? People are willing to listen to that argument?
Not at all. If you speak to any large software company, you will get the same answer, where they will all tell you we're deeply embedded in the workflow and we cannot be replaced. But that's not the issue. That's not the debate. Salesforce is also extremely embedded in the workforce or in the workflow. The issue is, can you translate, can you take AI and turn it into a growth engine? Is AI going to replace you? Or can you use AI, can you lever it up in order to grow? And that's the difference between the two companies. When it comes to ServiceNow, the company, when you deploy agents, when you deploy AI, you still need to govern, to route, to audit the trail, and you need to deploy AI in a responsible way. And ServiceNow is so embedded into the workflow that now that they have the right portfolio to address AI, they could actually turn it into revenue growth. And you can see it, a revenue growth engine, and you can see it in the numbers, right? The company is growing about 20%. Now, when you look at Salesforce, it's the other way around. AI is a major risk for the company because companies are looking to, it's not about, by the way, replacing Salesforce. It cannot be replaced. The question is, what about the growth? Can you accelerate growth or will growth decelerate? And the issue is finding new customers, upselling to existing customers, and maybe launching AI products that actually could find traction. And the agent force that they launched is not finding traction. So I actually see the two companies in the far two ends of AI. One is benefiting, and what could be replaced, at least the growth could be replaced by AI.
Tal, your target for Salesforce, I guess 9 times cash flow, free cash flow for its enterprise value, pretty significant discount, right? We're talking about 11% free cash flow yield. That suggests not a lot of long-term growth. Is there anything that Salesforce can do, in your mind, to kind of reorient itself and capture some of that future growth that you don't see it getting now?
So first, why? Why only 9 times? Because it's not anymore a growth compounder. It's a mature, very stable company that will continue to be a cash cow, generate cash flow, and will grow below 10% a year. That's why it deserves about 9 to 10 times free cash flow. What can it do? It needs to continue and invest in AI and try to find ways. I don't have the answer. I can only observe it. Try to find ways to turn AI into growth, and that means expansion. What we have seen, by the way, across the board is that companies try to expand elsewhere. Take, for example, ServiceNow, just as an example. They not only expanded into AI, they also expanded into cybersecurity, and they complemented the AI solution with cybersecurity. I'm not saying that Salesforce need now to go on a shopping spree and buy companies, but you have to grow into new areas in order not to stand still and not to turn into just a mature company, mature software company, rather than a growth compounder.
Seems like Salesforce and ServiceNow are the opposite ends of the spectrum in this sort of SaaS-apocalypse trade, Tal. And I'm wondering where you think Microsoft would fall in this spectrum.
Completely different story. So it goes back to workflow. I told you, all large cap software names are very embedded into the workflow. Microsoft is embedded into productivity. I cannot imagine corporates replacing the Office suite or any other dynamic suite with something else. Now, can the company take it and grow into agentic AI? Absolutely. This is what Microsoft is trying to do. It is trying to implement AI, but they're trying to be the orchestration layer of AI, meaning it's not about Microsoft providing you the best, quote unquote, ChatGPT, which Copilot, right? It's not about giving you one LLM that will outgrow competition like Gemini or Anthropic. That's not what Microsoft is trying to do. What Microsoft is trying to do is to give you a layer of AI, whether behind it you have Gemini or Anthropic or OpenAI does not matter. They will give you the best answer from all the LLMs, all the models that are existing. So the profile of Microsoft is to lever its well-established position within the enterprise space and grow within the Office suite. I'm not expecting them to be a standalone LLM and compete with Gemini. That's not the issue. So I think that Microsoft, within its target market, is doing a great job. Of course, there are always starts and stops, but they're doing a great job. They're directing in the right direction. They're going in the right direction. It's going to take time because AI just started. Don't forget that the implementation of AI by the enterprise market is limited right now, but they're doing the right things to grow.